Today we're going to talk about 10 tax efficiency tips, and if you would like to lower your tax bill, stay tuned. I got 10 of them for you. First one, 401k contributions. Applies for 403 contributions as well, 403b contributions. $18,500 is your maximum amount for 2018, or $24,500 if you're 50 and older. Roth Contributions is the second one, not to be missed if you qualify. This is where you can put $5,500 in per year or $6,500 if you're 50 and older, but there are income limitations. Now, if you're over those income limitations, there's something called a backdoor Roth, where you can actually put money into an IRA and then convert it to a Roth, and it achieves the same thing, more or less, because when you put the money into an IRA, you probably did not get a tax deduction, and then when you convert those same dollars, then there's no tax to pay because you never got a tax deduction in the first place. There's a few caveats there, though, so be aware of those. Roth Conversions would be another one. This is where you can convert money out of your IRA. You can put it into a Roth IRA so that all future growth, income, and principal is 100% tax-free. Tax loss harvesting. If you've got assets outside of retirement, they will tend to go up in value. Sometimes they go down in value. So the strategy here is, unfortunately, they don't always go up in a straight line. So when they go down, what we want you to do is sell when they're down, not because we enjoyed losing money, but here's the reason. You sell, you bought it here, you sell it here, you create a tax loss on your tax return, and most importantly, you buy something very similar. You can't buy the same thing. You let the market go back up, so you're still in the market, you'll still receive the market-like returns over the long term. In the meantime, you've created a tax loss that will be utilized against any other capital gains. Bunching charitable donations. This is this has been around forever, but it's more important now than ever in 2018. And that's because we have higher standard deduction amounts. So you probably know you can take the higher of a standard deduction or itemized deductions on your return. Now the standard deduction is $12,000 for a single person or $24,000 for a married couple. And there's huge limitations on how much you can deduct in state and local income taxes. So many of you will no longer be itemizing your deductions, which means if you have a charitable donation, you won't get any benefit for that. So what you might want to do is make a whole bunch of charitable donations in 1 year, right? So that you get over that limit, and then the following year you're not making any or very few. Basically bunching those deductions together to get over that standard deduction. Donor advice funds is actually a good way to do that because you can put money into a special account, you can get a tax deduction up front, and then you can utilize that account to give to charities over time. Donating appreciated stock is another thing. This gets missed a lot. Your church, your charity will probably take your stock account, your stock securities. You don't have to sell the stock and then give them the cash, just give them the stock. And then what the stock is valued at will be your tax deduction, and you don't have to pay taxes on that gain. Consider changing to independent contractor, new for 2018, because of this new Section 198 and 199A rule of a 20% deduction for certain independent contractor income. And finally, solar power. Let's not forget that. There's still a 30% tax credit. In other words, you spend $30,000 on your solar power, 30% of that's $9,000. You get a tax credit for that $9,000 credit. That'll be through 2019. Starting in 2020, those amounts will be lower. If you'd like more information, go to our blog at purefinancial.com.